Good morning, good afternoon, good evening to everyone attending this webinar, depending on where you are in the world. Thank you for joining this webinar dedicated to the evolution of sanctions and how to navigate the global sanctions landscape in 2022. My name is Theodora Kristova and I'm going to be your moderator today. At London Stock Exchange Group, I'm responsible for the partnerships with technology providers in the customer and third-party risk business. Before we dive into the webinar, let me go over a few housekeeping rules. You can use widgets at the bottom to discover the platform features. You can also submit questions via the Q&A chat box, and we will answer these at the end of the webinar. If we don't have time to cover everything, we will collate those questions and we'll provide a response via a follow-up publication. Use the toolbar at the bottom to access additional information such as speaker biographies, webinar material, technical support, and a short survey to capture your thoughts about this discussion. I'm excited to introduce you to an amazing lineup of speakers, each and every one of them thought leader in the financial crime space. They will be sharing their insights into the latest global developments in sanctions compliance. And let me start with Ernest Piana, Head of Specialist and Sanctions Research at Refinitive WorldCheck. Ernst, would you like to introduce yourself?
Thanks, Theodora. Hi, everyone across the globe. He is Ernest Piana speaking to you from Cape Town, South Africa. And the reason I'm speaking to you from Cape Town, South Africa is that I'm from the product called WorldCheck, operated by a large contingent here out of Cape Town, but also in my team having supporting functions on threat finance that falls within my team, which are based in the South and North America, as well as in Singapore. Threat finance responsible for international research on terrorism, organized crime, human trafficking, wildlife trafficking, and related specialist topics. But today I'm speaking to you with my hat on as leading the sanctions team that is responsible for all sanctions data in WorldCheck, and looking forward to discussing our sanctions data and the reaction of the sanctions data to latest developments with the audience. Thank you, Theodora.
Thank you, Ernst. Continue with Christopher Stringham, Head of Refinitive Solutions Consultants Team. Chris, would you like to introduce yourself?
Hello, everybody. Thanks for joining today. I'm really excited to be here with my fellow colleagues to talk about a very interesting and topical subject. As Theodora mentioned, I manage our solution consultants team in EMEA for our customer and third-party risk proposition and business. And I've been active in the space in risk management and compliance for about 10 years now. It's been a lot of changes, and this week has been a very interesting time in my career. And I'm looking forward to the next hour.
Thank you, Chris. And last but not least, we have a guest from one of our partners, Finastra, Titus Stronsky, Product Manager at Finastra. Titus, would you mind introducing yourself?
Yes, thank you, Theodora. As she said, my name is Titus. I'm a Product Manager at Finastra for an application called Total Screening. I'm speaking to you from Switzerland today, from Zurich, near Zurich. And at Finastra, we can screen transactions and databases against sanctions lists such as the WorldCheck data file.
Thank you, Titus. Now, sanctions continue to dominate geopolitics and global business dynamics. In response to the ongoing Russian-Ukrainian crisis, a number of countries' sanction issuing authorities have announced and implemented new sanctions, including US, UK, EU, Canada, Australia, Japan, Singapore, and Switzerland. This acts as a reminder that financial services need to have a strong and effective sanction screening program in order to remain compliant. This leads me to my first question to the guests. And Ernst, I hope you don't mind you taking this one. Can you provide us with an overview of the latest developments in the global sanctions compliance?
Yes, happy to, Theodora. If we can move to the first slide. So I think the challenge that we have is that when this webinar was set up some months ago and the invitation sent, we did not expect or could have foreseen the current events that's unfolding in Eastern Europe. So although that is by far the most topical aspect, there has been a lot of other sanctions developments in the past 12 to 15 months. So we will cover all of that, Theodora, and give a high-level overview on those developments as it relates to the sanctions space. So just to set things in context before I deep dive into some statistical analysis on those developments, the past year or so, also in other sanctions regimes that had quite a big impact. We cannot forget Myanmar, Burma. We cannot forget places like the China-Hong Kong sanctions. But of course, we will focus predominantly in my response to your question on the most recent developments. So before we just dive into that, just a few comments to set the scene before we look at that statistical analysis, as well as the developments the past week or so. So, as I said, I manage one of the teams within my group is the sanctions team that monitors all global sanctions on a 24/7, 365 basis, predominantly stationed in Cape Town, South Africa, but we also have support groups in the Americas and in APAC. So in this team, we have covered and we continue to cover all the known sanctions lists across the globe. And 100% coverage of the sanctions. Obviously, the main sanctions that you've just mentioned, Theodora, like Ofac, like the EU, like the UN, like UK HMT, DFAT in Australia, I can go on and I will talk a bit about them in a moment. We continue to monitor today as we've done them in the past as business as usual. We continue to focus on the developments of the past week, focusing on all those sanctions developments as we've done over the years. This specialist team covering these sanctions monitors this whole process, capture the data as quickly as we can for our clients to be able to bring into their screening systems. But not only do we capture the data, but we do also quite enhanced quality control on this data before it reaches our clients. So sometimes that might cause a small delay in the data getting to the client, but at least we know that when the client does see the sanctions data, that the quality is of such nature that it can be used within that screenings. As we have done in the past, we continue to do the past week is after creation of those records that's been published by the various sanctioning bodies, we assign the keywords identifying those records in our database. The database is going to 6 million records, but sanctions is a very small part of that database, but maybe the most important part of the database. So by assigning the specific keywords to flag this record has an exposure to Ofac, this record has exposure to EU, is even more important as the sanctions developed as far as the Russia-Ukraine situation is involved. In that process, a lot of time is also spent on what we call deduplication. So what we've seen, especially the past week, is that the various sanctioning bodies are following each other in the publications. I will show you some statistics around that in a moment and a time flow of how that has been taken place. So part of that process is deduplication of the information across the various sanctions listings. Sometimes the deduplication doesn't happen immediately because we need to be absolutely sure when we create a record that it actually refers to the same entity that's already on the sanctions database. But subsequently, our experts and language experts will make sure that if there's any duplication that continues to exist after the immediate sanctions update is dealt with. In addition, what we do as part of this process is obviously to identify sanctioned securities within the WorldCheck database. We are limited in the database to give ISIN instruments for new debt and new equity sanctions. But my colleague Christopher will talk a little bit more on the broader data set for the broader financial instruments that we have been capturing, continue to capture, and especially more relevant now within the Russian-Ukraine situation. So if we can go to the next slide, please. As I said before, last week when we prepared for this webinar, the idea was to look at the developments that we've seen in the past year or so. So please just allow me to give you some oversight as what we've seen in 2021. And then I will move to 2022, and I will spend most of my time analyzing the data, Theodora, if you don't mind, for 22. But we should not forget what has happened last year and some of the sanctions changes that has been implemented. So on this graph, a very busy graph, but I was planning before last week to go into lots more detail on this graph, but obviously things have changed. So I'm just going to be very brief about that and just call out some interesting developments, movements, and focuses of the international community. The interesting thing, obviously, to note is the dark blue line, which reference new additions to the various sanctioning bodies. Those additions in dark blue is not only additions of new names to the various sanctioning bodies, but also additions of new sanctions data points. So as you will see on the dark blue line, which is the most important one, the most active in 2021 was the US Treasury Ofac, by far the most active, as you can see from the dark blue line. And that has been mostly driven by those flags and the picture that I've got on the screen, starting from left to right, stating the obvious to many people on this call. A lot of updates in Ofac happened across the Magnitsky designations in 2021 on human rights abuse across the globe. We saw a continued effort from the US Treasury focusing on individuals and entities involved in human rights abuse and related abuse. As expected, Iran remained a target in 2021, as well as Venezuela, ongoing sanctions as it relates to the 2017 action as far as Venezuela was concerned. Nicaragua, we saw quite a substantial amount of additions of narcotics-related records, but the first big item of obviously for 2021 was Myanmar, Burma, and a lot of the sanctions updates that we see across the European Union, the USA, and other member states was a great deal focused on Myanmar and areas. But as most people will know within the financial industry, a big one in 2021 was the sanctions that was imposed as far as Hong Kong and China is concerned. Before the developments in Russia, Ukraine, was planning to spend time to speak about the Hong Kong-China sanctions, but I think we will maybe use a later occasion to talk about that. But safe to say that 2021 sanctions activity, especially from Ofac, of course, focused quite heavily also on China with new sanctions and various new sanctions regimes that was issued. Belarus was already also a target in 21 already before we got to 2022. So if we then look at the next slide, which then sets up what happened in 2022, you could see that until the end of February, the statistics is relevant as to the end of February. We saw a lot of action there on the amendment side of the United Kingdom. What I neglected to point out in the previous slide is that there was also massive movements on the data within the UK at the beginning of 2021. And that is what we in the sanctions team called Brexit 1, which was when the UK moved their sanctioning bodies and publications to the UK site, all those European Union information that was ingested within the UK database. And then we had at the beginning of February Brexit 2, that we call it, within the sanctions space, when the new files were issued by both the UK HMT, the OFC, as well as the regulator, which caused quite a big spike in the United Kingdom in the UK sanctions. So just to quickly explain why you saw that quite a big jump in the orange line for amendments for the United Kingdom, a lot of activity since February as they move to their new files, have been making changes to those files. But I'm conscious of time and hence not going to spend too much time on that. Just wanted to call out a few of those developments with you, Dora. So let me focus more on the current situation. So as you will see, by the end of February, we saw those activities in the blue lines. The most activity up until date, the European Union. And I will explain some of those numbers in the next few slides. But as everyone knows quite in detail, that there was a lot of reaction and continues to be a great deal of reaction from the Western countries as they are implementing the new sanctions as it relates to Russia. The Russian flag is bigger than the Belarusian flag here, because although we saw some Belarusian sanctions and we expect more Belarusian sanctions to follow if we listen to the developments in the media, that has also been part of these developments in the past few weeks. So if we can then move to the next slide, if you don't mind, which gives us a little bit more of a detailed breakdown. I've tried my best to summarize it as high level as possible. This data is as it was by the beginning of the day on the 1st of March. We'll quickly touch upon some developments that we've seen later on the 1st of March and on the 2nd of March today. But after the developments in the Ukraine, the first country to react to that sanctions was the UK, with the addition of 3 individuals and 5 Russian banks to the UK HMT, the OFC list. The number is not that high, as we know that some of these banks and individuals were already part of the database as it related to the sanctions against Russia after the Crimean invasion in 2014. So already quite a large number of banks formed part of the sectoral sanctions. So did some Russian oil companies, so did some Russian defense companies. A lot of these entries were already on the various sanctions programs. But the UK was very quickly followed, obviously, by the US Treasury under those executive orders, which I'm not going to spend time going into detail. Most of if not all of our audience know these executive orders quite well and what they entail. But we saw in a very short period of time, within 2 days, the US ramping up the already substantial sanctions against the Russian Federation by adding more individuals, senior politicians within Russia, close associates of President Putin, executives of state-owned enterprises and associates of those individuals, adding more entities, more of those state-controlled entities within the Russian Federation, adding more banks to be impacted by the sanctions that was issued, and also extending on the non-SDN and CAPTA program. But by far the biggest movement so far has come from the European Union. If we look at pure numbers, the vast numbers that were introduced last week, especially from the European Union, was in addition to some military officials, some other senior executives, some senior politicians, also sanctioning very early in 23 February, 356 members of the Russian Duma, that the indication given was that they voted in favor of the recognition of the breakaway republics and the subsequent action that has been taken place, which I don't need to go into. But that volume caused quite a big workload for us from the WorldCheck sanctions side, which we did within a record time to put that data in the hands of our clients. That was shortly followed by 77 updates and additions of more entities subject to the financial restrictions in terms of the regulations issued by the EU. What we've seen subsequent to that was the other Western countries, including Japan to an extent, having followed the US and the EU in those sanctions update by adding these individuals and the entities, majority of them, to their own domestic sanctions. First but foremost were Canada, followed by Australia, followed by Switzerland. So Switzerland was also very quick out of the blocks in adding these individuals' entities into the Swiss SECO regulations. What we then did see over the weekend, going into Monday, after the announcement of the regulations on Friday, was the addition of 99 individuals, mostly politically exposed people once again, some more senior military leaders, but also another large chunk of members of the Russian Duma that was added to the European Union sanctions list. Since then, the numbers have been lower since yesterday. It continues to be not at the same scale as it has been last week, but as these sanctions coming through from the EU, coming from the UK, coming from Australia and other entities, we continue to focus on those developments. Just today, we've seen that there's been some additions to the UK, Canada, Australia, but most importantly, with not having much time to go into that, the European Union has just announced the 7 Russian banks that has been cut off the SWIFT system. So, Theodora, that's been very quick. So let me just go to the next slide and quickly talk about that, because it's also relevant within this environment. I'm taking so much time, and I do apologize. So please cut me off if I'm going well over my time, Theodora. But I quickly give me 2 minutes just to talk about the aspects of implicit sanctions. Sure. So what I've been talking up until now has been the explicit sanctions, so the names that's been listed by these various sanctioning bodies on the actual sanctions list. But as the audience well know, there's also the so-called implicit aspect to sanctions, of which the most well-known rule is the Ofac 50% rule. Even when these 7 banks that's most recently, past few hours ago, been cut off from the SWIFT system, the EU regulation has mentioned clearly that also entities under control more than 50% by them will be impacted by this decision. So this aspect becomes very important. Not only has Ofac got this rule, not only has got the EU got this rule, so does the UK. So it does have a big impact on our clients when they look at sanctions and sanctions compliance to be able to identify these entities. So although the Ofac 50% rule has been in place since 2008 and shortly followed by the EU, this really became a big problem in 2014 with the first round of sanctions against Russia, because for the first time a big global country playing in the capital markets across the world has been impacted. So a lot of work went in since 2014 and still continues till today, especially on those sectoral sanctions. There's a little graph, a pie chart there on the slide. That dark blue just gives you a flavor of the number of records that's appearing on the Ofac sectoral sanctions. And the light blue is all those entities owned and controlled by these sectorally sanctioned entities. So this is a very important chunk of data that's very important to our clients. And since the latest round of sanctions have been introduced, our CIS team, our Commonwealth of Independent States, well, maybe independent's an oxymoron currently, but the former Soviet Union states, our researchers with the language capabilities, Russian-speaking and other language-speaking, because we know that these companies have got a footprint across the globe, has been unpacking and continue to unpack the ownership and control of these newly added entities and individuals to Ofac, to the EU, to the UK HMT, identifying the securities that relates to these individuals, owned or controlled companies, or the companies so sanctioned. So Christopher is going to spend time explaining some of the work that we're doing from a product side to focus on that. So my very last slide, just to segue into the discussion on sanctioned securities, just an example, a very recent example from last week from the EU with the new regulation that came out on transferable securities, money market instruments that will become effective from the 9th of March on the Russia, the government, the Central Bank of Russia, also impacting new loans and credit. And so once again, not only the asset freezes, that's for the SDNs and related sanctions, but also the broadest aspect of this narrative, implicit sanctions, the ownership or control of these entities, and how it becomes important for our clients to screen for these securities. So I do apologize, Theodora, that has been very quick.
Always very interesting to listen to you. I mean, what can I say? We can see that the shifting world of sanctions has been a common theme for a while, and it's probably going to remain fluid for this past week and in the future. But the sheer volume of updates and sort of combined with the complexity stemming from implicit, explicit sanctions, and now with the broadened remit of sanctions also capturing financial instruments and securities compliance, that's sort of obviously for everyone to consider and to make sure that our customers comply with this requirements. Now, I would like to focus on the practical aspect of sanctions compliance. And Titus, if you don't mind taking this question, in your job, from your experience with screening technology, you're directly involved in the practical aspect of sanctions compliance. So can you share with us, what do you hear? What are the customers' biggest pain points related to sanctions compliance? And can you also give us any practical solutions for that?
Okay, thank you, Theodora. I think when a financial institution does sanction screening, they always have the challenge between being compliant and also having the need to have their costs under control. And I think one of the biggest pain points are the efforts to deal with false positives, or the costs that false positives create, while they still need to find the needles in the haystack. And I think to achieve a good filter quality, I see three major points. And one of them is to reduce to the relevant sanction lists. A second one is that you have to have good data quality. I will talk about that at a later stage. And the third one is to tune and test, and I will also talk about that at a later stage. But coming back to reduce to the relevant sanction lists, I think we have seen in the slide before that I think less than 1%, if I read it correctly, is of the WorldCheck data is sanction related. And we can also maybe compare, if you look at the Ofac SDN list, I think it carries about 10,000 entries maybe. And I think the whole WorldCheck data file contains over 5 million entries. And I think what I hope we can answer a bit in this discussion as well is how can we guide a financial institution that they feel confident only to screen with the relevant sanction list as far as transaction screening is concerned. If you have to do KYC, you need more list information, but for sanction screening, it should be reduced to the minimum.
Yes, thank you, Titus. Yes, and Christopher, if you don't mind me moving to you now. So Titus spoke about key pain points around sanctions compliance. Can you share with us best practices for identifying those sanctioned entities and also screening funds? And also as a second question, if I may, and this is based on questions that have been coming through the chat, what can I, as a financial institution, for example, do to identify relevant sublists for name and transaction screening?
Yeah, lots of interesting questions. And to be honest, this isn't the week you really want to be answering those. You wanted to have a good system in place a couple weeks ago. When we started preparing this, I was thinking more general about, how to think about a sanctions process and program. And all of the things I was thinking about still apply today. Of course, we've seen such incredible volumes over the last week that, if any problems or inefficiencies you had in the process last week are costing you money today. So let's go through some of the points and talk about some of the things to consider when designing or improving a sanctions process. So sanctions are a very important foreign policy tool, but just because they're important doesn't mean it's fun or easy for any of us people that have to comply with those. It's really not fun. Sanctions compliance is my least fun part in compliance, in anti-financial crime compliance. And the reason is because it's a high pressure area. There are serious fines for failing to comply with relevant sanctions programs. And it's a process that's deceptively simple. So people think that sanctions compliance is really, really simple. I've worked at jobs before where my managers are like, how hard can this be, right? We have a name of a client. You search for that name in a sanctions list. They're either on there or they're not. Well, it's really not that simple, particularly when we're talking about narrative sanctions and things like the 50% rule. And the guidance we get from regulators is often very limited. It's basically, we don't care how you do it, just do it. That's not saying that there isn't good guidance out there. The Ofac frequently asked questions is really amazing, but they don't answer everything. So if we take the 50% rule, they say above 50% ownership, it's blocked. And below that, apply heightened scrutiny. But you apply heightened scrutiny whenever there's a significant ownership interest. As far as I know, Ofac has never defined this. And I don't know of any enforcement actions where they've actually made a statement and fined based on a violation of this area. I did some research a while back, and I found an opinion by the U.S. Customs and Border Patrol Agency on what significant ownership interest means. But even though CBP and Ofac are both part of U.S. Treasury, we don't know if Ofac is also going to apply that opinion. Now, what does this mean? I mean, we don't really know what the rule is, but how would we apply it anyway? Understanding ownership stakes is very, very hard. Sometimes, in many cases, it's impossible to know who the owner is of a company. And even if we identify something, it's not necessarily blocked. Ofac urges caution. Thank you. Thanks. That's brilliant. Don't necessarily know what to do with that, but at least I know I have to do something, and I have to think about it, and I have to try to identify these situations. I have to have a process in place for managing the risk when I identify it. Of course, identifying the risk is a huge challenge. Like I said, sanctions compliance is simple in theory, but golf is simple in theory. I have a ball, I have a hole, I knock the ball into a hole with a club, but sanctions compliance isn't a walk in the park, and you have to hit a hole in one every single time. And just like with golf, there's a lot of things that can go on to make sure you're not, doing that and not accomplishing what you want. Now, the first point is, which sanctions regimes do you even have to comply with? There's a lot of different sanctions regimes out there. People have different obligations, and they impact different people in different ways, and you have to reflect that. The second point is name matching. Sanctions regimes are based on names, on people, on entities, but names are really, really complicated. I'm actually reading a book about counterfeiting wine. It's very, very interesting. It's a lot of fun. But the main character, the criminal in the case, he actually used two different names based on language. He had a Chinese name and an Indonesian name. Which one was his real name? And if I think about this in the sanctions context, are the regulators giving me both names? What if I just search one? What if I don't even know the other one? How do I deal with this? And then we get into issues of fuzzy matching. You have to have some sort of fuzzy matching because names can be written in different ways. Maybe it has a prefix of some letters. Maybe it has a suffix of different letters. If I type in the name without the prefix, do I get a hit at all? And then fuzzy matching, of course, just kills the efficiency because you're having then so many matches that you have to remediate. You increase your operational resource requirements. You can partially do that by adjusting your name matching engine. You can partially deal with it by searching only against the sanctions that are relevant for you. But you can't cover everything in every situation. So, you basically have to be thinking about this stuff every single day. When you're doing your work and you're doing the remediation, you also have to be thinking about what results am I getting? Am I getting a lot of false positives? What can I do to reduce false positives? And you have to test. You need to make sure that the controls you have in place are actually managing the risk that you have. Next slide, please. So I want to show a situation about how sanctions can impact financial markets in particular in real life. So Ofac published an article about 10 years ago in the Journal of Investment Compliance. Yes, there's a Journal of Investment Compliance, but it was specifically for sanctions compliance for asset managers. And the authors do a really great job explaining the situation, and they mentioned that you have to manage the risk of where the funds are coming from and where you're going to invest the funds. But the examples that they provide are almost entirely dealing with where the money's coming from. Now, of course, since then, there have been a lot of developments in the sanction area. We have a lot more investment bans and restrictions on sending money, focusing on where the money's going to. And this can provide some challenges. Now, in the case I have on the screen, I'm looking at a screenshot from our financial information databases, and the owner of this entity, it is a publicly traded company, a well-known publicly traded company, and the owner was put on the Ofac SDN list. So the exchange froze trading of the instrument, and the markets basically seized up for this until that entity was able to reach an agreement with Ofac. Now, sanctions compliance here is kind of easy, to be honest, because it's a highly publicized event. It lands in the news. Everybody talks about it. The exchange froze the trading. This took place from, mid-2018 to beginning of 2019. If you're a trader and somebody asks you to buy 50 shares of this company, in September, October, November, it's going to be really hard to do that. Who are you going to find to make that trade? But naturally, not all situations are this easy. Next slide, please. And this slide shows the not so easy cases. So this is a company that's subject to the U.S. Chinese military company sanctions. Now, this specifically impacts the ability of U.S. persons to purchase the instruments that are related to the named entities. On the last slide, you could see the day that company and that person got sanctioned. You can't see it here because there was enough people in the world who could continue trading this instrument. But if you're subject to that sanctions regime, it's easy to make a mistake here because if you try to make a trade, somebody's going to make that trade with you. And of course, there's also topics about, can I hold the assets? Do I have time to divest the assets? I don't want to be holding the assets if, I'm going to be prohibited for trading later. And, you want to be able to identify these types of instruments and take appropriate measures as quickly as possible. Next slide, please. So when you're designing a sanctions program, name matching is the foundation, and it's always going to be the foundation. But when we talk about financial instruments, we have numbers. One thing that really helps financial markets deal with situations is that instruments will have identifiers that can be used to quickly go to the correct data, and everybody knows what everybody's talking about. Now we have ISINs, we have QSIPs, we have CDOLs, Valoran, VKN, RICS, our system, identifier that we have in the Refinitive space and LSEC space. There are a lot of different numbers out there, and the brilliant thing about numbers is you can do exact matching. Now, like I said, you can't replace everything that you were doing with name matching with number matching, but you can cover a lot of stuff. If you have a portfolio management system, you're using identifiers, and you can quickly screen your existing portfolio to see if you have any risks. If you're doing trading, you can use the numbers to say, is there a risk before you execute a trade? If you're doing payment screening and your clients maybe are putting the ISINs in the payment message, you can try to extract those and screen them and try to block the transaction before it gets made. It doesn't work in every single situation. You have to have a risk-based approach, and you have to have multiple layers of controls in place, because no single control is going to work in every single situation. And so by having multiple lines of defense, you can reduce your risk substantially. Next slide, please. It's the last slide. All right, so to talk, one thing that I've noticed in the last multiple months talking to compliance officers about compliance for sanctions in this space is the topic of identifiers. So we're looking here at a screen where we see the multitude of different identifiers that are available for a well-known company, the London Stock Exchange Group. And, this is a very big company. It's a very prominent equity. And so we have identifiers for this instrument left and right. There's a lot of different identifiers. But not every single financial instrument has to have all of these identifiers. Sometimes they'll have a ticker, but not a RIC. Sometimes they'll have an ISIN. Sometimes they won't. There's no rule out there that says that every single instrument has to have every single type of identifier. So when you're looking for data sets to work with in this space, you have to really take time to think about what identifiers am I using in my company, where can I get good data about these instruments, and do I have a service provider who can provide the instruments that I need, or at least provide me data to help map the stuff. This is an industry-wide problem with different people using different types of identifiers. ISINs are definitely making things better, but like I said, not every single instrument has an ISIN. At the bottom of the screen, I have some synthetic data from our new financial instruments risk intelligence file. This is something that we created recently to deal with the growing impact of sanctions on the financial markets. We start with the world check content, and any entity that's designated as sanctions or sanctions related in the world check data will be mapped to our financial databases. As Refinitive and LSEG, we have access to one of the largest databases of financial information in the world. We're one of the market leaders in this area. And we can definitely take advantage of that and pull relevant information about instruments so that we can quickly provide an instrument level view with good quality identifiers and information to do a quick risk assessment. What are the relevant sanctions regimes? What's the maturity dates, issuing dates? What's the exchange it's traded on? And we also provide the world check identifiers so you can map to the standard world check content for more information. And with this, we're hoping to help clients increase efficiency and reduce risk. And that's it. I hope.
Thank you.
Thank
you, Chris. Now, very interesting points, and thank you for sharing your best practices here with us. Now, Titus, you mentioned data quality. Christopher also mentioned data quality. And I guess in order to make the most of technology, you must have a very good quality of benchmarking data. And that data not only has to be trusted and reliable, but also structured and deduplicated. So once good data is provided, what else? So what else needs to be done in order to optimize the result? Titus, if you would like to take this question.
Yeah, thank you, Theodora. I think maybe just sticking to the data quality as such, I think when you do sanction screening, first of all, you need to have good quality data on both sides. So data quality of the transaction, but also of the sanction list. I think talking of the sanctions list, I think the data structure is very well populated. You know what a first name is, what a country is, what a last name is, what a city is. This is very well structured. Unfortunately, on the transaction side, this is not as well structured as it would make sense for perfect quality screening. But with the initiatives of SWIFT to move to ISO 20022, there are more structured requirements for the financial institution to populate the messages and the transactions in a more structured way. And that, I think, will give a significant improvement of the filter quality, because you no longer have to compare an individual's name to an address or the other way around, and this can be very helpful for the screening quality. Of course, it has to make sure that those new fields that are provided by SWIFT are populated correctly, and that is maybe something that the financial institution also must check. It's maybe not so obvious just for the transaction, but when it comes to transaction screening, this can be have quite a positive impact when it's done the right way. Other than that, I think I refer to the subject testing. You know, let's assume you have good quality on both sides. What still happens then is that the data of the financial institution that is used for screening is changing. You know, the customers change, the business of the customers changes over time, and maybe there are some whitelists or some rules, and suddenly, because of the move of the business, this no longer applies and has to be reviewed. The other part is when we look on the sanction list, we saw it before in Ernest's presentation, that there is not only a lot of change of sanction records, but also an increase of sanction records. When I remember 16 years ago, I think the first WorldCheck data file I saw, it had about 300,000 entries approximately, and today we're talking over 5.5 million. So we're having a factor of 16 or 17, not just of 20% more or something. And with this change of data is if you test a model today, in a year's time, that model looks completely different. And what can also change when you, since your last test, is that maybe your institution applies different changes. There were some findings or something, and things were changed. And those, of course, also have to come into the model. And I think if I talk of testing, what would make sense, if you test, then also document your tests, measure the figures, and we often recommend to the clients to have two data sets, like a must-hit data set and maybe an old production data set. And then when you do a tuning, you can optimize your productive data set, but still then compare it against the must-hit data, so you're not over-optimizing. Yeah, that's it from my side.
Thank you, Titus. Now we're moving to the Q&A session, and there's been quite a lot of questions coming in through the chat. I would like to encourage all of you to submit questions through the chat function. If we don't have time to respond today, we will collate and provide response via a follow-up publication. But the question that's coming up the most is sort of one of the most frequent questions is around WorldCheck processes, research processes, content acquisition processes. Ernest, would you mind taking this one? Please tell us more about how WorldCheck really functions and operates in such a fluid environment in terms of sanctions.
Yes, thanks Theodora. Can you hear me?
Yes.
Yes.
Great. Yes, WorldCheck has been around now for 22 years. So over the 2 decades plus, we have developed quite extensive processes and workflows to deal with all kinds of data acquisition, including sanctions. So let me just focus for the purpose of this call on the sanctions acquisitions process. WorldCheck has developed technology, AI, site monitoring systems that monitors these various sanctions listings, RSS news feeds, website watches. So that is the one way that we identify any changes to sanctions listings. But over the years, we have seen that these technologies sometimes can fail with the notification, so we don't rely on these triggers coming from automated systems. So we do manual checks of the sanctions list every single day. And for some sanctions lists, we do it almost every half an hour. We will go and we will physically go and look for any delta changes on the sanctions list. So when the Ofac list updates, when the EU list updates, or whatever the list might be, the team will immediately pick that up within the process, and we'll start with first evaluating what is the nature of the sanctions, what sanctions program does this sanctions impact. By 21 slide, for example, is it a Myanmar-focused program? Is it a Magnitsky-focused program? Is there a change in the sanctions program? And then after identifying the legalities around that sanctions, we then start capturing that data within the WorldCheck system and assign those keywords that I've mentioned, both what we call the umbrella keyword. For example, Ofac is an umbrella keyword, EU is an umbrella keyword. But we will then also append the program keywords, which we call the sub-keywords. In other words, in the Russian context, it will be one of the Ofac keyword as the umbrella plus the keyword tag that Ofac gives for that certain program. So the names will be captured, the keywords will be captured, the data will be captured, and then it will then go through a very strict quality control process, and only when it passed the quality control process does it get published to the client-facing systems. As I've mentioned in the first slide, we cover the most important sanctions listings 24/7, 365. And the reason why we do that is that our undertaking is to update those very important sanctions listings within 24 hours. In 99.9% of cases, we are able to do those updates within that space of time, but quite often we get pushed to the limit, as we were done on Thursday and Friday. Over that evening, between the various sanctions listings, we had over 2,500 data changes that we had to implement, working around the clock to make sure that data came into the database as quickly as possible. One of the questions that I, for example, seen on the chat was a question when the notification that we sent out on Friday in the afternoon, that's where we stated to our clients, we are prioritizing the updates for Ofac, for Australia and for Canada. There seems to be some confusion because the question said, why did you not prioritize EU? And the simple answer for that was the EU update was already done by the time that we sent out that notification. So at that stage, the Ofac, Australian and Canada was the only outstanding one, and we just sent out a notification to our clients to say we are working on this, and all of those updates were still done with 24 hours, although a lot of them came close to that limit. The vast majority of the updates were taking place within that period of time.
Yes, thank you. Thank you, Ernst. Chris, the next question is for you. I was hoping if you can speak about how people should be dealing with the current situation and any best practice that you can share.
Ooh, yeah. So to a certain degree, it falls back on your obligations. If you're a U.S. person, an EU person, UK person, Swiss, Japanese, or any of the entity, countries that have issued updates to their sanctions regimes, then you really need to be on top of this, be understanding what's going on. And you're probably going to be spending a lot of time reading executive orders and looking at the official journal of the European Union, etc. Now, you should have an automatic screening system in place to be able to catch a lot of things. systems using WorldCheck data, using software like Finastra, to make sure that you have that safety net in place. You're monitoring for updates. You're checking those updates against your existing names of clients. But in this type of situation, you're going to be doing a lot of manual work anyway. I mean, if the name, if the president of a country lands in the newspaper as being sanctioned, don't wait for the systems to be updated. Just read the news, get back to work, open up your databases, and start looking for risk. There's no one-stop solution for any of these problems, and yeah, I mean, the only thing you can really do is have multiple systems in place, multiple processes in place, and have systems that are flexible enough to do both automatic screening where it makes sense, but then also manual research where you need to do it. Yeah. I mean, one of the big challenges here is not only identifying the relevant risks, but it's trying to figure out what the risks mean, and that is incredibly challenging. In our WorldCheck risk data, we'll always have sources to the official documentation, the official sanctions list, to try to point out, where you can find more information. And our keywords relate to the specific sanctions regimes as well, so that you also have sort of a quick way of identifying the risk. To be honest, the simplest answer, as unsatisfactory as it is you might be working overtime in the next couple of weeks. It's just the way it's going. It's an unfortunate situation. The better systems you have in place, the better data you have in place, the less work you're going to have to do. But this is a very outstanding time, and we have to just rise to the challenge and deal with the situation.
Thank you, Chris. And I'm just mindful of the time. Ernst, we have a question for you. Can we please have your opinion on what the future holds for us? Do we see a challenging year coming ahead in terms of sanctions, or is it rather challenging years? What can you share with us?
As I'm speaking on this webinar, I'm constantly watching my emails for the sanctions team for any notifications coming out. I suspect the next few days we're still going to see a lot of sanctions volumes. Today, so far, touch wood, has been a little bit more quiet than the previous 5 days or so, but I still think it's the quiet before the storm. There are indications that the UK is going to come out with quite a substantial sanctions update. As far as Russia is concerned, there has been talk about 500 entries. My personal suspicion will be that will be the ones that the EU has been releasing so far over the past few days, including that close to 400 Duma members that I've mentioned. So I suspect that a large chunk of that 500 will be those Duma members, but also many of the corporates and banks and military companies that have been sanctioned so far. So we're looking forward to that update. We also expect across the other sanctioning bodies, as things continue to develop, that more updates will be made. This is a quickly developing space. I think the sanctions regulators are also working around the clock, identifying all these possible targets, sanctions targets, and I think they continue to focus on these possible sanctions targets. So I do suspect that we will see more action and more sanctions coming out against the Russian Federation in the next couple of days. If the Belarusian government and leadership decides to, in fact, I haven't checked the news lately, but we're expecting anytime soon that they might join Russia in the invasion and the support thereof. The international leaders, G7, has indicated that more sanctions will be followed against Belarus. So I suspect that we will see more sanctions coming out against Belarus as well. Obviously, we can't forget about the developments in Myanmar. That remains also a volatile area. A lot of concerns about human rights abuse within Myanmar. So I will not be surprised to see more action. So in the US and in the EU and in the UK with Magnitsky style type of sanctions, we might even see more of those human rights abuse sanctions coming out over the next quarter or so. But my biggest concern lies more in the area of what we call implicit sanctions. And one of the questions I saw that I quickly just want to touch upon it, that was asked is, what's the difference between implicit sanctions and secondary sanctions? There's actually a quite vast difference, because secondary sanctions is mostly where that sanctions applies to a non-US person. This started with the 2012 sanctions against the RGC in Iran, when the secondary sanctions was introduced, that extended that Iran sanctions not only to US persons, but to non-US persons as well. So that's secondary sanctions. Implicit sanctions or narrative sanctions is those sanctions that applies to entities owned or controlled by these various sanctioned entities and individuals. Also important to note that in 2014, with the Russian sanctions, the word in aggregate was added to the guidance that not only that direct and indirect ownership of more than 50% will be continued sanctioned, but if also more than one entity or individual in combination, in aggregate, holds more than 50% of an entity, that entity should also be subject to the sanctions. So to conclude my answer, I think the biggest concern from a data perspective, and I'm purely talking from a data perspective, is to make sure that the data that we gather on this is sufficient for our clients. But just in a final statement, Theodora, I know we're over our time, but we know that about 2 years ago, regulations were issued in the Russian Federation that allows companies that's been sanctioned in the Russian Federation or controlled by these companies globally, no longer are required to register ownership changes and detail of their holdings, etc., in the corporate registries and in the tax authorities within Russia. So that is something that we need to continue to be mindful of. And from a WorldCheck perspective, we look at other data sources and do other things to try and uncover that. So I think very short and sweet, that will be my view for the next quarter or so.
Thank you, Ernst. Thank you for sharing this opinion. We're over time, unfortunately. Very interesting and insightful session. I would like to thank all of you that joined today's webinar. For those of you that weren't able to join, they'll be able to access a recording. We will collate and provide response via a follow-up publication to all of the questions that were raised via the chat. Last but not least, I would like to thank all of my speakers today, Ernest, Piana, Titus Stronsky, and Christopher Stringham. Thank you. And with that, we would like to conclude the webinar.